Welcome. We are so excited to have you for our fourth webinar. We're going to give folks a minute or two to join in with us. So glad to see you this afternoon, unless you're joining, I believe, from the Pacific time zone, right? And then we're still in the morning. All right, we do have our recording function enabled. I know we have a lot of great content to get started with. Brian, do you think we should get started or give it another minute?
Let's give it another second. Let people join. We started probably a few seconds late and people didn't get the notice.
You think we'd all be used to it after the days of COVID, but I would probably say at least once a week, I fall prey to there's 1 minute left until this meeting. I'm just going to send this email, and the notification saves me. So absolutely, we can give folks another moment here.
Okay, let's get going.
Okay.
Wonderful. Well, thank you all for joining us for our fourth webinar of 2026. My name is Alex Bagley. I'll be your moderator and host for this webinar. So if you do have any questions or comments in the chat or Q&A box, I will be monitoring for those. Today's webinar is our first trends-based webinar, and we're really excited to have you here and join us for just everything that we're bringing back insights-wise. So this webinar has a long title here, but we're looking at trends across the industry. So 4 forces reshaping how research gets done. And this is coming to us from conferences that we've been attending, conversations with clients, industry reports, external industry reports. And really there's 4 themes that just kept showing up across the board. We're going to talk a little bit about AI, because that's a hot topic. We also have some insights around data quality. We want to talk a little bit about the money or capital flowing back in, and then also some of our new methodologies. So we'll be layering all of these together with and for you today. Before we get started, a little bit of housekeeping. You are in listen-only mode. So if you would like to share with your comments and questions, please use the chat or the Q&A box. If I have any folks that know me on the webinar, can you test out that function and see if the chat or the Q&A work for me? We will also send out the recording to you if you have registered for this webinar, and of course we'll put it on our website as well. And today we're really excited to have Andrew DeCilles and Brian Lamar. And thank you so much, Trey, for testing out the chat function. Appreciate it. Andrew, what's the big topic on your radar besides this webinar?
If you're alluding to Brian's cheekily included fun fact that I'm getting married in 11 days, yes, that is definitely top of mind. It's something that has been trending for most of Q1. But no, in all seriousness, though, very excited to be here. Been to several conferences and a lot of client visits, a lot of client conversations in the front half of the year. And, Brian and I talk about this kind of stuff all the time, and we've been having tons of internal conversations with the rest of the ROI Rocket team as well. And being able to synthesize all of the feedback from across the space into something that is actionable and kind of putting together the so what's is a very powerful conversation to have. So very excited to be here and get to dive in, Alex.
And then we know Brian, of course, but we're excited to have him back for this conversation as well. So go ahead and take it away, Brian, if you'd like to introduce yourself a little bit for new folks or just get started.
Yeah, Brian Lamar. Andrew and I are co-hosts of the Signal and Noise podcast. So this webinar might be a little bit more podcasty than normal. So hopefully that's okay with you guys. And for those of you listening live, we want your questions. We want your feedback. We'd love to kind of, even within this webinar, have a conversation if possible. So feel free to kind of jump in. And we'll also turn this into a podcast. So if you're listening to the podcast, thank you for joining. I've been in research for about 30 years, and I've always been kind of obsessed with the trends. And I was telling Alex 10 minutes ago that this has been one of the more challenging presentation webinars that I've put together, and it's because there's so much going on in the industry. I just went to IEX, I just went to the Insight Association, Ignite 2 of those days, went to one of the biggest CPG firms in the world, had a vendor day, a wire happy hour, another happy hour, lots of client presentations. There's lots of trend reports that are out there and thought leaders that have been putting stuff out there. Synthesizing that was a real challenge. And so I'm hoping this is well received. And I think it will be, because this is something that Andrew and I are obsessed with. So yeah, we're covering a lot today. And you'll see the topics here, and they're all kind of intermingled. And again, please give us your questions as we get through this. And by the way, in true Signal and Noise fashion, I'm not sure if this is going to be a 20-minute webinar or a 65-minute webinar. So stay to the end. I think we have some really cool slides at the end. And this is some of the sources that we're referencing. This is nowhere near all of the sources. You'll see a lot of overlap and correlation between these trends. We're going to try to take them one by one, but there's certainly high correlation between all the different trends. Lots of other resources that we're framing this: client conversations, partner conversations, signal and noise guests, conferences, just conversations that we're having. And so we're trying to synthesize all of that for you guys. The first thing is I wanted to kind of ground us in how our industry is doing. And I wish that the 2026 grit report was out. I know parts of it have been public, but I haven't seen it. But so I'm going to refer to the 2025 grit report on this. Our industry grew $12 billion between 2024 and 2025. I'm expecting it to grow again between 2025 and 26. And you'll see the 4 topics that we're going to kind of get through. But I also think this is despite this turbulence, is what I put on the slide here, it's an incredible time to be in our industry. And it's just an exciting time when you have all of these forces coming together at the same time. As an insights professional, I think it's real exciting. Okay, first thing that I kind of want to talk about is what I'm calling the accelerant, which is capital influx. And capital's been going into our industry for years. This isn't really necessarily a new trend, but it's coming from various directions now, and it's exciting because PE firms and venture capitalists, they take a lot of they really like the insights we're providing, and they understand the importance of our industry. And first, you'll see a lot of funding and new entrants to our industry with some recent deals and funding. Lots of new companies are getting Series A or B funding. There's high valuations from companies that have very little, if any, revenue. Consolidation is still rampant within the industry as larger firms build complementary capabilities. We'll talk a little bit about that. You'll see some firms are building more full service assets. Some that are more traditional qual are buying quant assets. Some that are more traditional quant are buying qual assets. And that's certainly a trend that we're seeing. And then I put a little line there. And by the way, in true signal and noise fashion, Andrew will be reacting blind to some of these news stories and some of the information I put on the slide. I thought this was super relevant. And so credit goes to Lenny Murphy. He wrote an article about this. But there were 2 announcements last week that I think are really important to understand. OpenAI is launching the Deployment Company. This is a $10 billion joint venture backed by Bain, SoftBank, and others with an explicit mandate to connect AI models to the operating systems of like PE portfolio companies. And Anthropic is doing the same thing with $1.5 billion entity backed by Blackstone, Goldman Sachs, and others. And they're applying like AI engineers directly into mid-market businesses to redesign workflows around Claude. So why does that matter? I think these aren't just model announcements, they're infrastructure plays. The companies they're targeting, which are mid-market businesses under PE ownership, are exactly the organizations where our clients live and where insights kind of sit, or insights team sit. And the signal here is that AI is moving from we have access to a model to AI is embedded in how decisions are made. And that's another theme that you'll see throughout. AI is embedded in how decisions are made. Pricing, churn, product roadmaps. This is territory that the insights industry used to really own. And this might have an uncomfortable question as part of it. If a PE-backed company's insight workflows are being redesigned by an Anthropic engineer, um, where do we fit? Where does the research supplier fit in this equation? And if you're not embedded in the decision process, if you're still delivering reports on a project by project basis, maybe we're structurally positioned as the bottom of the hierarchy that's being rebuilt from the top. And so deployment is kind of a new battleground, in my opinion, not models, not data, not a lot of the things that we're talking about. It's really deployment. And the firms that will win are ones that will connect insights to operations, not just deliver answers. And it's not really a technology conversation, it's a positioning conversation. It really is already started. Andrew DeCilles, I threw a lot of big words at you just now and some new information that you may not even be aware of. You're a smart guy. Any thoughts on anything on this slide here, or thoughts on what I just said?
Well, thanks for the setup and intro there. Absolutely. I think something that's interesting is that, as you mentioned, there's been private equity money and VC money in market research for a long time, right? There's always been investment available to research suppliers and to agencies who are looking to scale more quickly. And something that I see changing here is that we are seeing more mergers, more acquisitions, more, large financing, right? Like the Qualtrics Press Ganey is a debt type structure of the deal. And what's happening is that more of these are happening as like more vertical, or excuse me, rather more horizontal integration than vertical integration. We're seeing an expansion of capabilities. We're seeing the combination of complementary companies more than, I feel like, and this isn't data backed, this is just my gut from having been doing podcasts and talking to clients for the last 10 years. We used to see panel companies buying other panel companies buying other panel companies. We used to see venture capital or private equity coming in with a huge influx of cash for scale, right? But for the most part, that was what was happening as compared to this expansion of what a company can do as a strategic acquisition. And as we continue throughout the webinar and the trends that we're seeing, that kind of, again, I know you already alluded to this in the agenda slides, but like a mixing of methodologies, a blurring of the lines, if you will, is not only evidenced in what we're seeing our clients doing and their clients requesting, but also in the actual financial market activity in the space. To directly address the last 2 points there about these deployment firms being launched by the two largest model companies, to me, there's kind of a twofold signal there. The first being that the hype in the industry of AI is here, AI is incredibly disruptive, AI is incredibly powerful. We've talked about it ad nauseum, but the Anthropic report that 68% of market research job functions can be automated. Okay. If they need a $1.5 billion consulting company in order to realize that 68%, it's not there in the way that we think about it today. And so I really just want to kind of underline that, double click that, whatever business meeting jargon you want to use to say, pay attention here, is that tension between no one can just download this stuff and use it to replace a market researcher or, quite frankly, any function of the entire research workflow today. Conversely, though, the two biggest model companies have just created firms to make that happen.
Mm-hmm.
So that gap is now going to start closing for those organizations who have the capital to deploy to consultants to make it a reality.
Well said. Thank you. I like how you said this is something we have to keep an eye on. This was just announced. This is new. Certainly something that us insights professionals that we now have a little bit of a different competitive set to keep an eye on, I think.
Mm-hmm.
Also, I wanted to point out that Greg Archibald, if you know him, the user testing, user interviews combination, he said it should be called UTI. I think it's a great name. They can use that. Here's a list of companies that were at IEX 2 weeks ago. And on the most recent podcast, we kind of joked around that we had only heard of a few of them. And you're seeing this because AI is enabling companies to enter our industry very easily. Things that used to take hours or even weeks can take seconds. Automation of tasks takes what was very specialized skill and can complete it in the push of a button now. And that's the future of our industry. And so I wanted to point out all of these companies, except for maybe one or two, were at IEX, and I tried to understand what they all were doing, and it was a little bit of an overwhelming task. But obviously, there's lots of new entrants, and we'll see who kind of the winners are. And then I wanted to point out a little bit more detailed information, and you can spend your entire work week, if not longer, investigating these companies. Doing capabilities presentations, trying to determine who might be the next leader in the marketplace, who you should partner with. I know this because I tried to do it at the beginning of a week a couple weeks ago, and I barely scratched the surface. And so I can't tell you how many conversations I've had surrounding who has the best AI moderated interviews. Andrew was involved in a lot of that. A lot of people listening here were probably involved in those conversations. It was a little overwhelming. For me personally, AI moderated interviews, I'm on the list here, and synthetic data are closer to my role. But there are obviously a ton of other capabilities and companies and innovation that are entering, emerging, improving, or advancing in our industry. There's a little bullet point. Hopefully you can see it around how much funding they're getting, and they're going to be allowed in the industry because of this funding. When we were at the IA Ignite data quality B2B day, there were a lot of companies presenting that we hadn't heard of, and they have funding to get on stage, and that's where our industry kind of sits. One thing to ask questions are these tech companies? Or are they research companies adding a new innovative tech capability? Do they have a chief research officer or methodologist involved? Will they hire that? Are they acquired by a more traditional research agency? All of this new tech can be overwhelming is really the point from my perspective.
Yeah, and I think that looking at the number of logos on that previous slide and the number of, kind of groupings of them here with all of this capital coming in, more so than in past years, we're seeing individual tool or individual capability startups coming into the space. So it's a tool for X. And in the past, it would be more likely that we would see that as a new product from an established firm, that there would be either a large marketing research agency who rolled out a new tool as a new capability, or there would be a research supplier who had programming software or some kind of interviewing software, and there would be a new tool, again, as part of that existing capability. And these were all research companies. And so what they were doing was, at least to some degree, confined by established and accepted research methodology. With this, I'm going to use the word that's on the slide, as a swarm of new entrants that are essentially software companies first, research companies second, and most of them having a singular value proposition. It creates, yes, lots of opportunity for the open market to determine what's going to win, what's going to lose, what's going to work, and what is not. But at the same time, there's definitely a departure from that grounding in traditional and accepted, and vetted research methodology. And that's what I've been seeing at a lot of the conferences, is that there are entire companies that are based around assumptions for the research. Are adaptive open-end chat interfaced interviews really going to be a good new thing? I think so. The data looks cool, right? But that's a new company based on an assumption that that entire methodological innovation is the right one. We've been talking so much about the AI moderated interviews, but the research is still out on whether or not the human respondents will answer differently with the human moderator or with an AI moderator. And it also varies by the topic. That research on research is inconclusive as of today, but there's tens of millions of dollars going into these companies. So it's worth noting, exactly like you said, Brian, it's something to keep an eye on, but it's a little bit novel in the way that these new capabilities are coming into our space.
Let's take a live question. Mary Rubin, thank you for the question. How are potential customers responding to this proliferation? Best way to sell in this moment? I'll answer first, Andrew, if that's okay, and then you, especially the selling part, you can answer. But how are customers responding? I think a lot of people are just trying to understand this crowded AI anxiety world, where I think lots of people are saying, "Have you tried any AI moderated qual? What about synthetic quant? What's out there? Who's the best? Who should I partner with?" There's a lot of those conversations going on. We're all kind of in the similar boat. I think we're all trying to figure out demos and partnerships and find innovative ways to best serve our clients. It's taking a lot of time, and the proof points are hard to identify at times, or how to leverage is very tough to identify at times. Andrew, you want to add to that?
Yeah, absolutely. So, because you asked specifically about selling and how customers are responding, how to sell right now. Um, you know, research is a very weird space from a revenue generation methodological perspective because we operate in a low friction environment. So it's very easy for clients to switch from one provider to another. And we also operate in an extremely high volume environment. So your top client, you probably don't do 4 projects with them a year. You probably do 200 projects with them a year. And every single one is an opportunity to win or to lose. And so what happens is that there's a separation of sales cycles where there's this macro sales cycle where that's your entire relationship, everything as a whole, and then the micro sales cycle, which is the deal based, every project, every bid, everything that happens. Why do I begin the framing that way? We all know this intuitively, but in any, whether you're a sample provider, you're a programming platform, you're a market research agency working directly with brands, no matter what we have to offer, this is a relationship business, and our entire industry generates nothing other than insights, strategy, and knowledge. So, your expertise and your ability to consult with your clients is at the core of how we already work together on that macro level. So, in this context of this exact slide, having a deep knowledge of the new entrants to the space, the effectiveness of the tools, and the capabilities of those individual companies that are applicable to what you do so that you can advise your clients on those types of things is what's really going to help elevate that macro relationship and to put you in a position of expert consultation with your clients. I think it's incredibly important to know what's going on and to be able to provide advice there. Honestly, I'm very passionate about it. It's at the heart of what I do. It's why we do the podcast. It's why I'm co-hosting this webinar right now. So yeah, I think that, how are people acting? They're just as overreacting. They're just as overwhelmed as we are. Right? Everyone, all the way up and down the chain. And so spending time to understand what's going on so that you can help your clients understand is really the key value driver in this moment.
Hopefully it answers your question, or if not, we can address it at the end or have a conversation. That's capital influx. That's the first trend. Second one, I'm calling the breaking point, and this is the quality crisis. And it really wouldn't be a trends conversation, including Andrew and I, without mentioning the quality crisis. This is from the GRBN Buyer Sentiment Survey. Shouldn't be a big surprise for most of us listening, but I'm going to mention it anyway. Nearly 2/3 are accepting fraud as something unavoidable. Over half are saying that fraud has influenced decision making. Less than half trust our industry. I don't think I need to say this is extremely problematic. We have a huge trust problem in our industry. This, along with the capital influx, is a huge opportunity for new entrants. It's a huge risk for some of us. What other industry has this level of trust and quality issues? This is also problematic as the mainstream population only hears about the negatives. When polling is off, the OP4G or the recent YouGov news, which are rather public stories about our industry. And I'll let Andrew address this, but some advice here is I think we need to make sample quality more actionable, if that's the right word.
Sure.
Ask partners for the provenance and the chain of custody, not just the methodology. We have to rebuild trust.
Yeah, not too much to add there, Brian. But it is absolutely true that fraud, both bad respondents and bad responses, and whether that's fraud, poor quality, disengaged respondents, you name it, the amount of removals that happen before, during, and after a survey are on the rise. I don't think there's anyone here who looks at a raw data file who would disagree with that. And you're exactly right. It's the trust. We need to help our clients believe what the work that we're doing is of quality, and the quantitative measures of the responses that are being recorded do not suggest that. So it's a huge burning fire in the middle of the living room for me that we're really trying to put out into to try to tackle together.
Thank you. This was just released, by the way. This is brand new. And this is a preview that's been given out at a couple of conferences in the past couple of weeks. And, companies in the industry to kind of build this took a pledge to provide anonymized survey data to provide benchmarks. And you can see those benchmarks, this is wave 2, they're updated. And it's benchmarks for both pre-survey removals, in-survey removals, post-survey removals. And those are the categories that we're aligning with in the industry. And there's a few things that are rather concerning. Number one, from my perspective, working with a really good B2B panel, we have 59.6% post-survey clean-out rate. That's really crazy to me. That seems high when I have low expectations of quality. That's the number one thing. The patient post-survey cleanout rate is high. I actually think the B2C might be even a little low. And you can there'll be a lot of webinars about this. I don't want to spend too much time on this, but I'm glad we have benchmarks. The industry is number one, but it just seems very high.
Yeah, only thing I'll underline is that 60%, 59.6% for B2B. I wish I was more surprised.
Yeah.
I hear that from clients all the time who do B2B research, that it's just unbearable. And as with any kind of data collection, knowing what you're buying and why and the trade-offs that are going to happen, if you're buying a $24, $32 business owner, you're probably going to throw away 60% of them.
Yeah.
And making an informed decision and knowing what you're getting into is, you use the word provenance before, right? And having that level of accountability to who owns that removal rate, and then the so what of it when it is high. We all just need to own that and get that down, because that's ridiculous. It's more than half. How do you trust what's left if you're throwing away more than half of it?
Well, let me add to this. There's been a question asked: if almost 60% of B2B responses are getting thrown out, what are we actually buying when we purchase B2B sample? What are we actually buying if that many are being thrown out? That's a great question. I think it is really hard to verify B2B respondents, number one. When someone says they're a decision maker for something, it's really hard to prove that. I know at RO Rocket, we take a number of measures. We have a whole team that sits in Denver, and that's a lot of what they do is to track down. They're basically investigators usually at an individual one-by-one level. they're looking at what PII they set up for the panel and investigating them. And we use, we use all of we have 3 different kind of fraud and verification companies that we partner with that helps. And then we manually look them up. If that's LinkedIn or a number of other third-party applications to try to make sure they are who they say they are. And it's really, really hard. I think that the recruiting part of it is where we get our best advantage while we're throwing out a fraction of this amount. And it's because we're recruiting, custom recruiting, invite only to groups of people that we are very, very, very confident that fit the criteria of our studies. And we're doing that with matching licenses and working with state license boards to try to match and things like that. Andrew, what else?
Yeah, I mean, when we say what are we actually buying,
Yeah.
theoretically, what is left is still of quality, and it's been long accepted pricing practice in our space that you don't pay for what you throw away. So, yeah, theoretically, you're still buying what you think that you're buying. It's just an incredibly dubious and arduous process to get there. It's 60%. I agree with that sentiment, and I think you would question what else is there, what is actually left in the 40. But by and large, you're buying the same thing. It's just a more difficult to use product, if that makes sense.
Yeah.
Yeah. Yeah, I mean, I could go on about why it's worth it to pay $70 to $100 for a B2B complete that's been triple verified, and how that lets you, trust the rest of the data and so on and so forth. But um, maybe there's a time and a place for B2B profiled consumer sample.
Yeah.
Most of my clients don't make that decision, but yeah.
Yeah. That'd be that's a webinar we just recently did, the B2B webinar. I don't want to be just too negative, and so I threw in the GDQ, put out some 10 steps to improve your data quality. So you can screenshot that. I don't want to necessarily go through all this. The GDQ and Insight Association and SMR will be presenting a lot of this, but I don't want to be just all doom and gloom. There are efforts, there are committees, there are people trying to solve these issues. So that's data quality. Number 3 is AI disruption. Big surprise that AI is a trend in our industry. But like I put here, AI is rewriting the rules, and I want to put a caution in, will pure methodologists ensure that AI is introduced into our workflows, into our methodologies, into our research without introducing additional bias or risk. That's how I'll kind of start off this section. The next thing is you can use AI to put together a pretty good matrix of what new companies are out there and what their advantages are, what their disadvantages are. And obviously it needs to be reviewed and confirmed, but you can do a lot of like the desk work, as we call it. You can use AI to kind of do a lot of that. And this is something I actually did this a while back, just trying to understand the landscape and just put a screenshot of it in here. And then, researchers are nervous. That's one trend that I think, and we'll have a couple of slides on this. And, the framing of this matters, and the data quality and AI is not just about bad actors. It's about a structural problem that we have, I think, in the industry. We just have synthetic fraud at scale that's a little nervous, more bias. Sampling ignorance has been a problem in our industry for quite a while. And so when we're thinking about AI disruption from a sampling perspective, this certainly has a place to think about it, both good and bad. Anything to add there, Andrew?
Yeah. Just, looking at the slide and addressing it directly, the synthetic fraud at scale, I want to be very particular in what we mean about AI fraud at scale because,
Yeah.
for example, at the Data Quality Insights Association Ignite event, Verisol presented some statistics around the types of fraud that they're seeing. And it was actually only about 6% bots, right?
Right.
But what we're seeing is an incredible number, and this is also confirmed anecdotally by my clients when we're discussing removals and looking at things row by row. There's a lot more like click farm, fraud farm, survey fraud center activity than we're seeing before. And using LLMs open in another browser, open on a completely different device, right? It allows both people who are non-native English speakers to take the survey in English, translate it, so on and so forth, and to do so much more effectively than before, especially without that capability existing like in the browser, which we can detect, or copy paste translations that we can detect. But doing that on a different device and using it to answer the survey, it also increases the fraudulent respondents' ability to take a B2B survey or take a healthcare survey because all of that information and expertise is available at their fingertips. So just wanted to split a hair there around what's going on. I think we already addressed the fact that a lot of the new companies aren't grounded in methodology. That's a great call out. And we don't have another 2 hours, so I won't dive into too much about the synthetic sample and kind of garbage in, garbage out, what's it being trained on. But excellent thing to call out as well. Any of these synthetic products, any digital twins, are going to require a significant amount of vetting.
Awesome. Thank you. I actually presented this slide earlier in the deck, and these are the same companies, and they're not the only ones invested in AI, obviously. And I wanted to point out that when we spoke to clients, we did a little tour about a year ago, Andrew, and only maybe even half were even thinking about AI,
Mhm.
AI solutions, testing synthetic, etc. And now a year later, we're talking to a lot of the same clients. I feel like everyone is. I think I've talked to one client who basically kind of dismissed it, but everyone is having these conversations. Everyone is testing. And I wanted to quote Jay Scott. This is a LinkedIn post from today. I thought it was really good. This is part of it. Jay Scott, if you don't know, is the CEO of KSNR, and he had a post today that said the synthetic data conversation has gotten ahead of the evidence. And this is what you were saying, by the way, Andrew. There's been plenty of excitement, less consistency, and almost zero believable proof. Looks good is not a standard. And so
Mhm.
I 100% agree. I think you do too, based on what you just said, Andrew. I think most traditional researchers agree. And it's really our job as insights leaders to balance this. And this one's a little bit off the beaten path. I kind of took a little turn on this one. And this is based upon a lot of conversations I've had with you, Andrew, AI isn't just changing what researchers do, it's changing how they think about themselves. And so the LinkedIn B2B Institute, which I didn't even know existed until 2 weeks ago, they're really smart people. They do a trends research, and they're slowly releasing their 2026 trends. And they presented some of these at the Insights Association Ignite B2B Day. And I think the full trends report's out in the next week. Highly recommend downloading it. But they identified 5 trends. This one was called Alice in Wonderland. And the metaphor is that down becomes up, big feels small. The familiar looks different. And I think that's a perfect frame in what we're seeing in research right now. And um, one of the favorites was where they brought to life the new era of AI, how it aligns to Alice's experience in Wonderland. And so this kind of flips the narrative a little bit. And we've been told that AI adoption is being held back by resistance and inertia and organizational friction. And that's partially true. But when LinkedIn looked at this, like who was actually using AI, the power users, they found something different. And these people are 25% more likely to use AI for tasks they already enjoy, not the tasks they dread, not the efficiency plays that they're probably their CTO is pitching, And these are the things that I'm really curious about. And what this kind of tells me, and I'd love your thoughts on this, Andrew. AI doesn't really replace motivation, it amplifies it in a sense.
Sure.
If your team isn't curious about the problem, AI is not going to fix that. On the research side, if your respondents aren't generally engaged in a survey, AI generated data about them won't fix that either. Um, I could go on this, but for time, I'll just do the third one. And this is the one that's closest to home for me. High performers, the people that have built their reputation and doing their job better than anything else or anyone else, they're 25% more likely to worry about becoming too reliant on AI. And they're 2.3 times more likely than lower performers to fear that Gen AI is eroding and what makes them differentiated in the market. And from a research context, if AI can write a survey and analyze the data and produce a report in minutes or hours, what's left in the craft? What's the differentiation? And my answer may not be a comfortable one. The data underneath the analysis is really the last kind of defensible moat that we have as an industry. If the inputs are fraudulent, biased, unverifiable, not trustworthy, it doesn't matter how good your AI is at synthesizing them. Garbage in, garbage out. And the high performers who are worried about this are right to be worried. The ones who will come out ahead are the ones that treat sample quality and respondent validity as non-negotiable, not as a kind of a line item. Boom. What do you think of that, Andrew?
Yeah, I mean, you're of course correct that sample quality becomes more important as we find and uncover more efficiencies in the entire research work stream. And as more and more of that work stream becomes delegated to tools that are doing things almost instantaneously, the quality of the inputs is just going to matter more. You can do more with less data, or you're modeling more, so there's more derivative steps from the initial survey. We've been saying it for years: garbage in, garbage out. I agree with you. The place that I would kind of disagree with you, though, is that data collection and the quality of the data becomes sort of the last moat. I think that as AI tools become more powerful, we're all going to need skills in how to interact with those tools, right?
Yeah.
And let's say that it took a researcher 20 hours to create a presentation in the past, right? And half of that time was spent on data analysis, and now that's gone. Right. I don't
Yeah.
think that means that same researcher using AI is going to do twice as many presentations. Maybe. But I think that the work that we're going to do is going to get better. I actually think that AI tools are going to push us to create even more impactful, insightful, and unique deliverables than we have in the past. This kind of negative sentiment that we see here with the 50% who are more, 15% who are more concerned. And I like how I jumped away from the percentages to the 2.3x because the 230% seems really big. But
Right.
it's those high performers and those who are AI optimists are also pessimists, more likely to be worried about being replaced. It's just because of the
Yeah.
familiarity with the tool and the depth of understanding of its capabilities. I'm a huge AI optimist, and I really think that it's just going to allow us to do more with the data that we collect in the time that we have. I really don't think it will even reduce headcount on a 5 to 10 year horizon.
Whoa, that's interesting. Okay. I like that. Thank you. I'm not going to spend too much time on this, but I created a worry matrix about who should be worried about AI. And this is really more of Brian Lamar's worry matrix. And maybe we'll do a podcast on this at some point, Andrew, and kind of do a deep dive on this. But I'm not going to really go into it. But this is what I think by types of different researchers and companies you work at, where maybe the worry might be. And if you disagree, I'd love to hear from you. And I'll just kind of move on. And I wanted to kind of summarize the last three sections here. And one thing that is key is that these aren't four separate trends necessarily. They're really one big, larger story. And methodology is where the industry is forced to choose, I guess. The core argument is that they aren't running in parallel. They're a system, and they have feedback loops just like any system, and um, the individual trend analyses might miss. So here's how to think about it. AI disruption creates pressure on methodology, which creates pressure on qual and quant providers to converge. Quality crisis makes every more traditional approach look fragile, possibly, creates an opening for AI entrants. This attracts capital, compresses the timeline. We're going faster now. The capital coming in funds both the AI platforms and the consolidation of incumbents, potentially reduces quality oversight, and then accelerates the quality crisis. So the methodology reframe, which this might be the more controversial trend somehow, is really the output. It's where all of these other forces arrive. And industry doesn't really get to choose whether this happens, only whether it leads or follows. And so if you're waiting on one of these forces to stabilize before you make a strategic move, you're waiting for something that's not going to happen. Question is kind of which direction you're facing. So this is kind of getting to our fourth trend, which is the methodology reframe.
Yeah, and I think that this slide is really the most important one that we're presenting today. We've been talking about the data quality crisis in market research for the last decade. There's always been news stories about capital coming in, but obviously in the last year, that's been huge. It's changed the way, the structure of how it's being deployed. And then, of course, I probably can't go 90 minutes without AI coming out of my mouth, right? Yeah. But what's happening is that the capital coming in is creating a new variety of mixed methodology tools than we've ever had before. Earlier on, when I was discussing that, it was kind of in a little bit of a negative light that, they're software companies, maybe this isn't vetted. But regardless of what you think about them, there's a lot of new toys to play with. And with artificial intelligence, it becomes much easier to deploy those tools. Those tools are really fast. And as you use AI in your workflows to increase your capacity, you have time to experiment and to innovate, right? Put all that in light of the fact that we're throwing away 60% of B2B completes. And guess what? If you can get those respondents to throw in a video open end, to engage with an AI moderator, to participate in adaptive open ends,
Yes.
the assurance that you have in the quality of the research that was done and the data that was collected goes through the roof. In the same way, what I was just saying on the last slide is that I think we're going to be providing more value than we ever have before. What does that look like? New methodologies, new depths of insights coming out of what would have been just a simple quant survey 3 years ago. So this methodological reframe is really the response. Oh, you literally called it the response, right? It's the response to these other three trends. And yes, it's been kind of creeping up over the last 2 years, but it's absolutely where we have been led by the advent of artificial intelligence, by the companies created by this capital, and all of it in context of the quality crisis.
Excellent. Completely agree. I just kind of fast forwarded here for the basis of time. I don't want people to focus on the vendor list here. I just kind of made this up. This is going to change, but it's kind of the logic of what each category is really striving for. And, AI, like you were just saying, AI moderated qual is solving for a scaling problem, right? Now we can scale this. Maybe the reason that qual has always been somewhat subordinate to quant in strategic research isn't that it's less valid, it's just it doesn't scale that well. It's iterative and it depends on the quant to validate it. But perhaps you couldn't run 1,200 qual at scale in-depth IDIs. Now you can. Now maybe you shouldn't, but we have the ability to do things like that. And that really changes the standard for qualitative work, and it changes the whole budget conversation, which I'm sure you're interested in. Synthetic respondents can solve a reach problem, not a replacement problem. The use case that makes sense is B2B segments, rare medical conditions that we can't reach, hard to reach demographics like uncultured Hispanics, DMAs. We haven't been able to do DMAs at scale, and this can solve that problem. either traditional research is prohibitively expensive or structurally impossible in the past. And so the mistake might be deploying synthetic where human sample is available and verifiable, and too many teams are making that mistake right now because it's cheaper and not because it's better. And I could go on about some other things, but I'll just end with that part. Any thoughts on that, Andrew? I'm sure you do.
I don't think so. I think that's a good summarization.
Okay. Again, kind of what we're saying, blending qual and quant lines have really disappeared. I mean, a year ago they were blurred. I think that's what the slide said. A year ago they're blurring. I think they've really disappeared. And we need new skills. That's one thing I wanted to point out is that, and I'm an old researcher, and quant and qual were very, very distinct. And a lot of times quant people couldn't understand qual, and qual people couldn't understand quant. That's a problem for us old school researchers. And the new school people are coming in not thinking about quant versus qual. They're thinking about how can I leverage methodology and innovation and all the tools that I have on hand and the new tools that are out there to solve business problems. That's what's happening. And so if you are a qual expert or a quant expert, we need to bone up on those other skills and understand how they both lend to answering the business question at hand. So build these proprietary data assets now. And I think piloting hybrid qual quant before your competitors do is integral. The firms that move first, which we're seeing that happen today, they're going to really set the new standard.
Yep, I couldn't agree more. I see this every day. We don't segment our qual and quant panels here at RI Rocket, and most of our respondents have participated in some kind of participated in a qualitative activity. So they respond well to new things. And so because of that, our clients are trying out all kinds of new cool methodologies. And I have the privilege of being on the front line to see that. And it's happening every day now.
This is really a summary slide, which I'm going to skip for the basis of time. Happy to talk about it more. We're both happy to talk about this more. But I wanted to, just a couple more slides. We'll take some questions. I wanted to make sure that we had a slide where disruption narrative might get it wrong. And those are that are the loudest. The ones at conferences, they're co-presenting with big brands. They don't necessarily represent the entire industry or a larger trend. Keep that in mind. The industry is still those of you and us that are just doing the freaking work every day. The companies that are traditional market research firms that may not be on the main stage at conferences every day, that traditionally have low margins, but have been solving client problems for many, many years. That's still kind of in my opinion, the baseline of our industry and the most important part of our industry. Number one. Number two, we've talked about this. Synthetic still needs proof. I'm working on that, hopefully. Among many others are doing that. Every credible synthetic data platform anchors to verified human samples. None of them claims the model works without a quality human baseline. The narrative that synthetic replaces human is almost always a funding deck, in my opinion, not a methodology paper. We're going to see methodology papers come out. We've seen some come out already. Qual isn't dying. It's becoming the differentiator. Love your opinions on all of these, Andrew. When every quant study runs faster and cheaper via AI, the thing that becomes scarcer and more valuable is genuine human depth. That will help. Like you just had a great analogy around adding value, building trust, right? That was great. The researchers can moderate and probe and interpret and connect it to the numbers. Those are harder to replace than the ones that just field surveys. Again, another point you had earlier. And the trust problem won't be solved with more technology. Very few people trust our industry, and it's not really a cool problem. It's a culture problem. New platforms won't fix it. Some are actively making it worse by claiming capabilities before they've been actually validated, and more technology deployed faster into a low trust environment produces lower quality decisions at a higher speed. Anything I said that you disagree with?
No, I agree with all of that. And I think in the interest of time, let's move on to some questions.
We have,
Oh, excuse me. After your takeaways.
Just real quick, I'm just going to do this really quick. Sample quality, obviously, verified humans and panels are the most important thing. Number one, AI strategy is not optional. Every company needs to have an AI strategy. Balance the rigor with innovation. This will help rebuild trust. The market structure is changing. I was talking about that earlier with the OpenAI, et cetera. And I'll change. We'll do a podcast on this one, Andrew, for the basis of time. This whole slide could be a pod, or the last two slides could certainly be a podcast. And if you've been listening this long, thank you. And sorry we couldn't really go in depth as much as I'd like to in the last couple slides, but we'll do this again. Alex, any questions that we missed?
yeah. Well, we have one in the Q&A section from Brian Peterson that says, how do we, as industry, change the behavior of the end buyer to pay for quality? You hear companies talk about quality and then they want C-level respondents for $12 and then ask why the quality was bad. What are your thoughts?
My first answer, and I'll let Andrew answer, is we have to prove that the quality is better. If someone thinks you can get just as much quality of a CEO at $12 than you can at 70, then we've got a big problem in our industry, and there's certainly buyers of sample that believe that. That's number one. We've got to prove it. Yeah, Andrew, anything that?
There's two parts to answering this question, and it's really key because until people are willing to pay for quality, the quality won't get better because it's expensive to recruit and verify good respondents, particularly in the B2B space. So on one hand, we've talked about accountability several times today. If someone says, they won't pay for quality, so-and-so doesn't value quality, they never have the budget, so on and so forth. If you're a salesperson on this call, it is your job to convey that value and to convince someone to pay for it, period. End of discussion. The reality of that, though, is that, like Brian said, we have to actually prove that out. And you also have to actually prove out that there is return on investment for that $60, $70 complete. If your client is confident that after they clean out 90% of the $12 CEOs, that the ones that are left are of good quality and they just paid 80% less, and they don't mind spending the time doing it, you've got a long uphill battle to fight in order to convince them to increase that budget. And I don't want to dive all the way in and kind of, describe like how I do this, but there certainly are ways to make these arguments that I have seen clients spend considerably more in the last year than they have historically, particularly in the B2B realm. And it's just really drilling down into showing provable returns on time spent cleaning, on the quality of the insights that they're getting out of it, so on and so forth.
Let's take a couple more if we have them, Alex. And I know it's a hard stop. It's 3 p.m. here on the East Coast. And so thank you for joining if we don't get to say goodbye to you. So if you have to hard stop, we'll take a couple more questions. We might go a couple minutes over.
The other one I had, I don't recall if you answered this one already, but I dropped it in the chat. It said, are there research categories or verticals or methods where you'd still say don't bring AI into this yet? Traditional approaches just do it better.
Well, first off, anything high risk, don't even consider AI. Anything that's expensive to implement, don't even consider AI yet. Number one. Anything that has nuance, emotion, qualitative I would highly recommend against it because it's hard enough right now. Humans are interesting creatures that we don't remember what we did or why we did it, and it's hard to understand that. And so AI is going to have to understand that nuance at some point in the future. That'll be one of the last things that it gets to, if ever. Also top of mind. Andrew, what else?
Yeah, I'm kind of going to disagree with you a little bit. I would say those are all areas where you should use artificial intelligence with caution. Yeah. But I would encourage everyone to try to be on the bleeding edge of using artificial intelligence in research, in that in every project you're executing, there's likely some value to be gained, even in discovering like what doesn't work, right?
Yeah.
So
I mean, I agree with
I'm
that.
not saying, throw everything into your $20 a month Claude license and think that it's going to be magical. Everything that you just said, Brian, are absolutely high risk situations. But, you know, there's no area where I wouldn't try today.
Yeah, I agree with that. Like, as long as you're trying and you're comparing, you're investigating, we're researchers, right? At the end of the day, we should be researching new methodologies and synthetic and see where it best fits as we're advising clients. That's part of my role, is to advise clients on when to use synthetic, when not to use synthetic. Where is synthetic today? Where might it be in 6 months? Where might it be in 2 years? What type of research should we be testing and partnering on? Things like that. Absolutely. Everybody should be doing things like that. Testing and coming up with their own use cases, because that's where you'll get ahead. Absolutely. I like that we're 61 minutes in before we had like a debate. Not really a debate, but a debate.
No, that's super helpful, guys. I don't have any other questions that came in. So if you're still on the line and you have one, you can drop it in the chat. But otherwise, we'd be happy to take the rest of the discussion back to LinkedIn or email, or however you guys like to receive questions, right?
Send it to our AI chatbot. Oh, just kidding. We don't have that yet, unfortunately. Hey, thank you all for listening. Thanks for joining. Alex, thanks as always. Fantastic working with you. Thanks for all your help. And Andrew, as always, great working with you. And for those still on, thank you so much. Have a great day.
Thanks. Have a great day.
Thank you all.